Whether you're an avid property investor or about to buy your first property, why do it alone when you could partner with Australia's best buyer's agent? Director of Pure Property Investment, Property Investment Professionals of Australia board member and REB Buyer's Agent of the Year, Paul Glossop, can take your portfolio to the next level. Get in touch today to discuss your investment goals. Get one-on-one insight from Paul Glossop. And for the first 100 people, this service is completely free. Head to purepropertyinvestment.com today to schedule your consult with Paul Glossop directly.
Welcome to the Smart Property Investment Show with your host, Phil Tarrant.
Hello everyone, welcome to an all-new episode of the Smart Property Investment Show. Unfortunately, Phil Tarrant is not in the studio today. It's me, Grace Ormsby, one of the journalists behind the Smart Property Investment Show and the Smart Property Investment Network, more widely, writing all the stories that you see each and every day. One of the things that we love about the Smart Property Investment Show and the format of our podcast is that we get to interact with property investors of all walks of life at different stages in their property journey. And we're joined today by one of our listeners who has reached out and who is a long-time listener and a relatively recent first-time investor, Matt Chamberlain. Welcome to the show.
Thanks for having me.
Matt, where are you joining us from today? We're obviously still social distancing, so we are recording via Zoom.
Yeah. I am joining you from Newcastle. I'm currently working from home, as I'm sure most of kind of corporate Australia is at the moment.
And how are you finding it so far? Has COVID really changed your life all that much?
Funny you should ask, actually. No, not really. I was a bit of a homebody anyway. So my partner and I actually joked about it when it kind of all kicked off that, our life didn't really change that much because, we didn't go out a great deal because of that. I think, we've been pretty good savers as well. So look, COVID hasn't really changed us, although I probably need to invest in a more comfortable chair because this one, getting a couple of back issues, I reckon, out of this one.
Yeah, especially if you've been sitting it for the last 6 months. That'd do it.
Absolutely.
So, Matt, one of the first things that you said when you did reach out is that you are only 25. Has age had anything to do with, your desire to invest in property?
Yeah, absolutely. I think I was probably really lucky to get on the bandwagon a little bit earlier than most. And it all really started for me when I read The Barefoot Investor back when I was 17. That kind of kicked off my journey about understanding, investing and what that means for the individual long term. And it really got me in a good kind of headspace to work towards pretty much from the day I put that book down. That kind of culminated in maybe 6 or 7 years worth of hard work, hard savings, and putting together a deposit for an investment property.
Was it almost like a bit of a common sense decision, like this is just what it's going to look like from now on in? I'm an investor?
Yeah. I mean, look, the book taught me a lot about the kind of, the key to investing, which is compound growth. And I started actually investing in the share market because I thought that was kind of, that's what the book told us to do, right? And I spoke to my parents about it. As soon as I turned 18, I opened a brokerage and I invested. It was actually back in 2014. I invested in probably the height of kind of the market at the time. I invested in Woolworths, I think, Origin Energy and another company.
The blue chips,
and
basically.
Pretty much. Yeah, well, you'd think so, but pretty much I think I bought them all at the high and kind of wrote it slowly down over the next couple of years. So while I was kind of over that period, I also went to uni and studied business and commerce. So kind of, again, learned a little bit more about investing long term and that kind of stuff. And then picked up Rich Dad, Poor Dad, which I think leads the journeys of most property investors. And then pretty much, from that point forward, realised that property was the vehicle that I wanted to take forward in my investing journey.
And I know that you've listened to the Smart Property Investment Show as well for the last, is it 3 years that you were saying?
Even longer. I think I was listening to it back in 2016 or 2017. I needed to commute to uni about 40 minutes each day, and that was just enough time to fit in an episode. So I quickly caught up and I've been kind of following you guys ever since.
Well, that's awesome to hear. And I'm sure that there's plenty of people that are out there listening that I'm imagining are in the same position now that you were back then. So it obviously hasn't been an overnight decision for you to become an investor. Can you talk us through your first property investment?
Yeah, sure. It all started actually through SPI and a couple of other podcasts where I learned about buyer's agents. and what they could do for the individual. And I actually connected with some who helped me buy my first property in Brisbane. So as I said earlier, I'm based in Newcastle, and from day one, pretty much because of what I'd learned on the podcast, borderless investing didn't really, impact me too much. It wasn't an issue. I knew that as long as I connected with the right people, when I had a lot of trust in them, I felt comfortable to invest borderless. So
because it is a big deal.
Yeah, absolutely. I think a lot of people, at least in my kind of personal circles, family and friends, thought I was a little bit crazy at the start, spending a little bit of money, but also just, the concept of buying something that I still to this day haven't seen.
Really? You haven't been up there yet?
No, I haven't been up there. And look, to be honest, I don't necessarily mind. I know that I've got a good team together that's kind of managing that for me while, up in Brisbane, and I don't really have any desire to go up, short term or medium term. So I just hope that it continues to grow and, forms part of that foundation of the long-term portfolio.
I guess with the borders being closed, there's not much chance of you getting up there anyway. So it's probably for the best that you've got that attitude about it.
That's right. Absolutely.
So talk us through the property itself. When did you get it? How much did it cost you? You obviously didn't go and see it. How did you find out about it? All that kind of stuff.
So firstly, I spoke to a mortgage broker because, again, SPI and a couple of other podcasts taught me that you kind of really need to go into the whole process knowing where you stand from a borrowing perspective. So I spoke to a couple of brokers. I did a bit of interviewing of these different brokers in Newcastle. I found one that I went with, got pre-approval, and then I started speaking to a buyer's agent. I'd been watching these buyer's agents. They'd been putting a lot of content out themselves for a while, got to know them, felt comfortable. So we pretty much jumped straight into it. And then they took me through, a high level suburbs that could fit my borrowing capacity. And then they took me through different metrics to, I guess, substantiate why we'd go into those suburbs. But eventually we settled on, where I purchased was in Petrie in the Moreton Bay Regional Council area. And my property is only about 2 k's from the new University of Sunshine Coast campus was scheduled to open this year, semester one. I'm not sure if it did, but thankfully for me, my tenants aren't tied to the university at all. So they've been quite good through COVID.
We might take a quick break there, Matt, but when we come back, I want to hear the specs about this property. And, and you talked about the university being a big driver of that. I want to hear a bit more about the conversation that you had with those buyer's agents at the time, and even the decision to invest up on the Sunshine Coast. We'll be back shortly. Hello, everyone. Welcome back to an all-new episode of the Smart Property Investment Show. I'm joined by Matt Chamberlain, a Newcastle-based investor who bought his first investment property up on the Sunshine Coast. Matt, what kind of property was it? Was it an apartment? Was it a townhouse? Was it a unit? I imagine it's more houses up there, lifestyle area.
Yeah, absolutely. So the property we settled on, we bought it for $370,000. And it was on a 607 square metre block. And that block size was part of the strategy because the intent is still today to build a secondary dwelling on that property and turn it into a dual occupancy. So looking for a granny flat build. And the reason why we bought that particular property was because it fit the requirements to build that second dwelling. And it was also close to the uni. So I knew that there was going to be some rental demand and tenancy demand in the future. So that was really the basis of the strategy for the property purchase. And the reason I wanted to go kind of more cash flow rather than growth on this one was because at the time and still today, I'm not earning, a significant amount of money. So borrowing capacity, but also negative gearing and what that does to my personal cash flows probably wasn't something that, was a priority. But I know that obviously as the income grows, then you tend to change your strategy about what type of properties you're looking for and what you want those properties to do.
For sure. And what was the deposit like on a $370,000 property? What had you put down?
So I put 10% down, and that was enough to secure the property or to get finance for it. And originally, I think my borrowing capacity was up at about the 420,000, including deposit. But yeah, we found this property and it ticked all the boxes a little bit cheaper.
That sounds great from what I'm hearing right now. How long was the process from, starting with the mortgage broker before you actually ended up with the property?
Well, I guess if you consider the first time I spoke to a broker, it was probably about 18 months. But I spoke to a broker, we went through this process and I realized that I didn't have enough of a deposit to buy a property that kind of fit my goals. So we put it on pause for 12 months. And then I reckon the conversation probably started with the broker in, say, April of 2019. And I exchanged contracts on the 28th of June 2019. So it was a pretty quick turnaround.
Yeah, that's definitely a quick turnaround, especially if it's an investment property and not owner occupied and you haven't been to the property, I'm imagining. So that is around when we were gearing up for the election. How did that happen? Was it part of the plan?
I'm glad you brought it up because I knew that there was a lot of people that were holding off around that time. And it's probably the reason or one of the contributing reasons to why we got the property for such a good price, because we began looking as the election was going on. To me, the decision of, which way politics was going to swing wasn't really going to influence my short-term decision making, because I knew it was, this is kind of a long-term play. So yeah, it was definitely kind of interesting through that period. But once we knew that Liberal were kind of back in, it kind of meant a good thing for me. I was already in a position to buy. I was ready to go. And we got the property for the price we did. And as a result, I think it did quite well. We bought it at the right time for a good price. And it's actually been revalued recently at $395,000. So we've already seen a little bit of growth in it.
That's awesome. And then what's happened in that, we're in October now of 2020. I'm just having to calculate. We're over 12 months past, but what have you done in that 12 months since then? How's it gone for you?
It's been interesting. So I thought that I could put the granny flat in. I was told by my broker in Newcastle that I could put the granny flat in with my borrowing capacity essentially straight away. I had enough money to what I thought to make up a 10% deposit, which is what my broker was telling me on a construction loan.
Is that, sorry, that's with the extra money that you had because you didn't need to use all that money for the original mortgage, right? Because it was cheaper?
Correct. So my broker was telling me that, we could secure the finance. However, and I think I commend the buyer's agents because they were confident with me or transparent with me from day one that they essentially said that typically granny flats from a valuation perspective, when you're getting finance, tend to value a little bit lower than, say, the complete cost price, which means for the investor that you'd likely have to put in a higher deposit amount to get the loan over the line. However, my broker, and I listened to my broker instead of the buyer's agent, my broker was saying that it was going to be fine with just a 10% deposit for the granny flat build. Eventually what happened was the valuation came in a little bit low and I couldn't proceed with the deposit amount that I had. In that time, I'd actually split the block in half. I'd battle axed it and I'd put a fence dividing the backyard of the main dwelling from where the granny flat was going to be. And it is still in that situation at the moment, which means that when I actually went to lease the property, it was appraised at $380,000 to $390,000 when I purchased the property. But when I put the back fence in and I divided the property, essentially cutting off the backyard, it meant that we had to go to market and secured a tenant at $350 a week. So that was a mistake that I made, probably from just taking advice from, the wrong person, I think. But essentially what that meant is that we secured a tenant for 6 months, and I think it probably worked again into my favor because then they signed on again for a 12-month lease in early March. And
just in time?
That kind of was, that's right, just in time for COVID, and they've been very, very good so far.
I'm imagining with the granny flat, it sounds less of a granny flat and more of a proper duplex that you've got going on. What are the hopes that granny flat will end up bringing in income-wise?
That's a great question. And that's probably what interested me so much at the start, was because for me, the build cost or the contract price for the granny flat was $122,000, and that included site works. So that was partially the fence that was built, removal of a couple of trees and that kind of thing. And there's evidence in the market of existing granny flats in that particular market bringing in about $300 per week in rent. So if you do the maths on that, that's actually close to about a 12% return on investment for the granny flat cost. And I mean, from being an accountant as my background, 12% return on investment in cash flow is something that's probably not to be sneezed at, and something that I thought was very, very valuable. The only downside, and I'm yet to really experience this myself, but I've heard that it can stunt growth in the short term because banks don't tend to like the idea of a dual occupancy separate dwelling, so a granny flat and a main dwelling, as opposed to, say, a duplex or something if you're going the dual key.
Have you stumbled across any zoning laws or anything that have had an impact I'm not actually sure. How does it work up in Queensland?
Yeah, so the buyer's agents were really clear on this from day one, and that was why we bought in the area that we bought. So we bought in the Moreton Bay Regional Council local government area, and in that area at the moment, you're able to build a granny flat as long as it adheres to preset town planning laws. Essentially, as long as it adheres to those town planning laws, a private certifier can come in and certify the building, and then the granny flat provider can build the granny flat without going actually through council, to my understanding, going through council and wasting a lot of time in DAs and that kind of thing.
So then what is the timeline you're looking at for that build to happen?
Great question. It was, and it still will hopefully be next year for the granny flat.
So 2021.
We'll be building, that's right, yeah. And hopefully getting the PPR early next year, and then we'll be in a position to finance the granny flat and get that positively cash flowed.
And now that you brought up the PPR, we might have a quick break, but afterwards I want to hear all about your future strategy and what's going on into 2021 and beyond.
Are low interest rates impacting on your investment returns? It's time to rethink. Rethink Investing creates wealth for clients through the strategic purchase of positively geared, high cash flow commercial property. Industrial properties, retail assets, or office spaces can be a smart investment option that produces significant and long-term return on investment. Rethink your investment options and look to commercial property. Learn more at rethinkinvesting.com.au. Rethink Investing, Australia's #1 commercial buyers agency.
Welcome back to this episode of the Smart Property Investment Show, where I'm joined by Matt Chamberlain, and we're talking all about, he's just got his first property, well, over a year ago now, up in Queensland, and he's looking ahead to the future now. You've obviously made it through COVID okay, and by the sounds of it, it hasn't changed your strategy too much, Matt. But what's the next 12 to 18 months looking like for you? And then even further beyond, like, where's your head at right now?
Yeah, so 12 to 18 months, it's definitely focused heavily on the PPR. For my partner and I, we're looking to get a place big enough so we can have a furry child. And from there, we would love to get the granny flat built and completed, so that essentially that property, that foundational property in our portfolio, can be a bit more of a set and forget. And then from there, we'd really like to expand and develop probably more a growth-oriented strategy over the next couple of years while we're in a position to do so with our income and our borrowing capacity. But more longer term, I'm 25 now, so we've got a little bit of time on our side, but longer term, we'd like to essentially build a portfolio that can allow us to have the option or be able to make the decision to retire by the age of 50. So essentially, that's the long-term goal.
So you're
and that's
halfway
what's driving most of our decisions today. Yeah, that's right. In time, but definitely not in portfolio size, though.
Well, it sounds like you're on the right track so far. With that PPR, for those that don't know, that's the principal place of residence. But is that going to be around the Newcastle area? How are you seeing the markets go so far?
Yeah, for sure. Definitely in Newcastle. We're finding that it's busy. There's lots of people around. I actually looked at the stats on Newcastle the other day, and through COVID, it actually grew, which
I've been hearing that a lot. As someone who's from Newcastle myself, it's slightly worrying.
Yes, very much so, because it means we need to get in soon and save, get a house that can kind of grow with us over the next couple of years.
For sure. And then will you stay local when you're looking more towards that growth strategy, or are you still happy to be going out of area and interstate? And will you be looking more at properties, I guess, actually visiting them in the future?
I mean, that's yet to be decided for us, because I think the whole experience going borderless from the first one was enlightening, and it was also really good to be able to do it, to know that it's possible. And with a little bit of help, it's very, very easy. So with that being said, I really can't see us, staying local unless the local market really stacks up for us in terms of, the prospects of it in the next coming years. So for us, it's hard to say at the moment, but I personally think that by the time we're ready to buy, I think Perth might be an interesting play.
Is that a lot of your research? Like, do you do a lot of that looking at what other markets are doing and then sort of comparing them to what you're seeing locally? Or are you sort of guided by what the buyer's agents are telling you more?
I spoke to the buyer's agents in Brisbane and became quite friendly with them. They were very helpful and happy to stay in contact after I bought. And they've really let me in on all of the things that they look at, the data metrics that they assess when they're, looking to buy for their clients. And I've just kind of subscribed to all of those newsletters and information that comes out. And really, I think that's probably the start of where I get all of my, investing knowledge from at a kind of macro level. And I feel like a lot of the data at the moment, I think Westpac came out last week saying that Brisbane was the highest growth prospects over the next kind of 3 to 4 to 5 years. So I think that kind of data is what I would be looking at to work out from a macro perspective where I want to put my money in the future.
And then on a micro level, what are the sort of things that get you excited about property and investing? What are the things that you, I guess, want to be able to say that you've invested in looking back when you're 50 and you're retiring?
Anything that grows.
Good starting point.
Yeah, absolutely. It would be, if I was interested in a market, then I would go and speak to agents. They're on the ground. They know what's happening in their markets. They can also comment on rental demand, that kind of thing. But I guess in between, you've got the high level, say like a city, and then you've got the low level, which is the individual suburb or the person selling the property on that particular street. But in between, I'd probably actually try to speak to a local buyer's agent and see what their thoughts were, because I feel like they're a good medium between knowing you want to invest in, say, Brisbane, but then, where to invest in Brisbane. That's probably the question that you need to be answered with a bit of confidence. And I feel like the buyer's agents, at least in my experience, were the ones that could tell me where to put my money.
And with that leveraging of the PPR, I guess it's probably hard for you to have a proper roadmap in place if you don't even know what that's going to look like. Is that fair to say?
In terms of what the PPR looks like?
Yeah, and what you're going to be able to leverage from that. I guess that's crystal ball gazing, isn't it? No one really knows what the future will look like.
Yeah, that's absolutely right, which is probably why up until now I think I've placed a lot of certainty on, or my planning on, physical savings, because at least in my investing journey, it's only been a short time, but it's safe to say that you can't rely on the market. You can't rely on this linear growth that's going to happen year on year. You can build the best plan, but if the market doesn't, immediately or imitate the plan, then a lot of what you want to do in 5-10 years just goes out the window. So for my partner and I, we want to focus a lot on savings, because we know that that's actually what we can physically measure and plan for. And then if we get growth in, say, the PPR or this property in Brisbane, we'll absolutely try and leverage it to get into the next properties after that.
And I hate to drag up mistakes, but I'll try not to dwell on it too much. But you did mention that putting the fence in the Queensland property wasn't the greatest idea. Is there anything else, I guess, as a parting gift to our listeners that you've done that you've gone, that's probably not what I should have done? Or is there anything that you're glad that you didn't do over the past few years? How did those shares end up going?
Yeah, terribly. I sold them. Luckily, I invested in Afterpay as a speculative stock, and it kind of made back all the losses that I'd had from my Woolworths shares.
Would have been a gamble in itself. So at least that one paid off.
Absolutely. That's right. So another mistake, probably part of that mistake that I mentioned earlier, was that I took someone's advice as fact when I probably should have done a little bit more of my own research, or kind of set up, instead of being the middleman between two people and communicating to each separately, being that person that sits at the table with all of my experts around the table with me and having a cohesive conversation, because that way my buyer's agent would have pretty quickly told my broker that, even though my broker thought from the finance point of view that the investment or the loan would stack up, the buyer's agents would have been able to say, well, hang on, because of, in our experience, the valuations don't go so well, and this process that you think you can follow might not actually work. So the mistake I made there was just kind of taking one person's piece of advice and not comparing that to other pieces of advice, I reckon.
That sounds like a pretty good warning to other people as well out there.
That's right.
Matt, it's been great to talk to you today. Thanks so much for sharing your story with the Smart Property Investment Show. And I think you'll have to stay in touch with us. Let us know what's going on when you do end up buying that residents, and best of luck with starting a family. It sounds like you've got some exciting things happening.
Thanks very much, Grace. It was awesome to be part of the podcast.
To everyone at home, if you enjoyed this show, please leave a review on whatever platform you're using to listen in, and be sure to subscribe to us if you haven't already. And if you have any questions for the Smart Property Investment team, don't hesitate to reach out either via our social media channels or at editor@smartpropertyinvestment.com.au. Until next time, stay safe, stay well, and keep investing. Bye for now.
The information featured in this podcast is general in nature and does not take into consideration your financial situation or individual needs and should not be relied upon. Before making any investment, insurance, tax, property or financial planning decision, you should consult a licensed professional who can advise whether your decision is appropriate for you. Guests appearing on this podcast may have a commercial relationship with the companies mentioned.